Draper Associates and all the other Draper funds were born just like the startups. We exist to service a need. The need is founders and entrepreneurs need us as their partner to provide a solution to society, whatever the problem they're solving. So our core business model is to work with founders who come to us and say, hey, there's a problem in society. I spent a year trying to solve it. I built a prototype, but I need more capital to scale this. You please help me, right? So 100% of the time, we listen to our entrepreneurs and see what they are telling us. And then we make a judgment. Does it make sense or does it not make sense, right? So about 7 to 10 years ago, we have all these entrepreneurs who came to us. One person came and said, hey, I think that, the capitalization cap table management is antiquated. People are sending spreadsheets left and right. Not very accurate. Startups don't have money to print, stock certificates. I look at that and say, this makes sense. Let's invest, right? That turned out to be Carta. Another entrepreneur came to us and say, hey, after financial crisis, money is a problem. Money should be a service government provides, but there should be an IT upgrade for the way government handles money, right? So that turned out to be Coinbase. Another entrepreneur came and said, hey, my parents used to trade stocks over the phone. I trade stock over the computer, but young people, they want to trade stock over the phone on an app, right? And apps needs to be free. That's God-given right. Apps are free. So what do you have? It's a free mobile trading app. And that's how Robinhood was born. So you see each one of these it's not like somebody came in and say, hey, this is going to be, let's revolutionize fintech. When you listen to your customer, and for us, it's entrepreneurs, when all these different customers are coming into you with a similar or different ideas in the similar broad space, something is changing. But the amazing thing is at the time we didn't know. At the time, these were 3 different projects. It's only 10 years later, you look back and say, oh, we were so smart. We figured out there's a new space called fintech. But at the time, it really is based on very simple principle, is to listen to your customers. So you ask, so we're halfway through. In my mind, fintech, we're kind of halfway through. But I do think everything like in life, it's a long tail. The revolution or transformation will never end. Just like even today, communication transformation is still happening. Retail transformation is still happening. Enterprise productivity, transformation is still happening. It's just the number of pure ideas and the number of new ideas and new startups and new unicorns will probably decline over time. It has to, right? So what else is left in fintech, right? My humble opinion, by listening to entrepreneurs, here are the following, right? I think insurance is still drastically underrepresented. And I don't think I'm telling you anything controversial. Look at your insurance, how you do your insurance today versus 20 years ago. No change. Look at how you bank, how you trade stocks today versus 20 years ago. Drastic change. Guess what? Insurance is going to change. And why? Insurance within fintech is more regulated than retail. Fintech is more regulated than enterprise software. So fintech takes longer to transform. Within fintech, large space. Insurance is more regulated than cap table management. Insurance is more regulated than trading. Insurance is more regulated than banking or money, right? So it's natural. It's coming next, right? What else is coming? Prop tech, properties, right? Properties are actually kind of interesting. While it may not be more regulated than other industries, in a way, the barrier to entry is much higher because you're dealing with most people's single largest investment in their lives. It's people's houses. Designed or not, it turns out to be the largest investment. If I think about it, it shouldn't be, right? Why should houses be the single largest investment in people's lives? That's out of necessity, but not out of choice. So you'll start seeing some innovation. If you think about your personal wealth, let's say I'm worth $100, right? I'm an average US citizen, $100. I bet $90 of my wealth is tied up in real estate, $10 in 401k. Is that right? That's not right. Okay, I should say, is that optimal? Definitely not optimal, right? It should be something like 30% in stocks, 30% in alternative, 30% in, public stock, 30% in alternative, 30% in property, and 10% in cash, something like that, right? You never heard of a Morgan Stanley portfolio strategist said, hey, we recommend 90%, real estate. You just don't hear that, but that is what people have, right? So I think prop tech has quite a bit of potential, but it does require some fundamental re-engineering of people's mind and people's investment strategy, right? So interesting things like fractional share ownership of house, right? If you could own just a portion of your house and another portion of somebody else's house, but you live here. So decoupling ownership from actual living is quite interesting, right? So prop tech and the whole automation of how to buy and sell a home and record keeping, all of that, I think could be a new area for transformation. Not to mention, when the government prints out so much money, I think most assets will continue to rise, and real estate, especially with leveraged cheap debt, it's prime for bull market. And when you have a bull market like that, you tend to have a lot more money that would trickle down to startups. So I have high hopes for prop tech. Last but not least, within fintech, what Brian Armstrong started with Coinbase in transforming money, that will continue. And that will probably continue for many decades to come, because the transformation that happens in money and blockchain applies only to a small aspect of blockchain application. But once you penetrate that market, you could take the same technology and apply to other things, such as supply chain management, using blockchain to track supply chain, using blockchain to track provenance. Now you buy art, how authentic it is, or you buy medicine, where it was made. So you have smart contracts that allow you to facilitate and automate micropayments. You have a song that play on the radio. Every time that song is played on the radio, you have to pay 1 cent to the copywriter. And that group of people, that 1 cent goes to songwriter, the artist, the recording studio, the artist who made the album's cover, whoever, all these people, they'll get a fraction of a cent. Right now, with human, we have auditors who check, accountants who make sure the numbers are right, lawyers draft the contract, escrow agents who hold the money, the bank who transfer the money for 1 cent, right? It's not scalable. So if you do everything on blockchain, then suddenly, you could do a lot of these micropayment and complicated transaction by machine. So I would say blockchain is probably as close as it comes when you think about the next transformation technology after the internet, right? It's a little bit different from AI. It's a little bit different from big data. It's a little bit different from mobile or shared economy, which those are closer tied to the mainstream internet natural evolution, whereas blockchain kind of takes it to the next level. So within fintech, you have this little blockchain or crypto space that's kind of being incubated by the fintech industry. But don't be surprised if this industry then kind of blossoms into a general technology that then goes back and transform communication, transform retail, transforms entertainment, and it transforms enterprise productivity. So this is kind of a very interesting thing that's happening, and it's probably not the way I'm describing. I could probably done a better job. If you fast forward 10 years later and look at the situations today, you may suddenly realize, oh wow, the blockchain or crypto is not a fintech technology. It's actually a fundamental technology as powerful as the internet that will first transform financial services, but it will actually eventually in the next 30 years transform different parts of our human society. I used to track the millennials, but now I feel like I have to track Gen Zs. So let's just say young people collectively are looking at finance very differently. They've grown up in a more connected world, and this has two impacts. First impact is they are more collaborative. They are more willing to share with each other about their finance. So I was like, hey, how are you doing this? I only have $500 in my 401k. What should I do with it? Or what should I save? Should I put money in stocks or should I buy a house? They're a lot more open. If you could share, your pictures eating bananas or like you cleaning up dog poop on Instagram, all right, I think it's okay to share your finances, right? So if your life is already that open to public, your finance is not that different. So a lot more collaboration. Two, a lot more international. These kids have grown up in a iOS or Android world. To them, there's more difference between iOS and Android, and less of a difference between I am Brazilian and you are Chinese. Doesn't matter. Okay. You say, oh, hey, there's language. Guess what? Google Translate, right? Translation is basically free. Transcription, real time. It's not a sci-fi. One day you could be speaking Spanish, I be speaking Russian. We could have a conversation in real time, no problem. And I would even say one day, it's possible today. It's just no one has done it yet. So language is not an issue. Culture is not an issue because they all grew up on Instagram, on TikTok. Doesn't matter. They're the same people. You know what's a bigger gap? It's the age gap, not the cultural gap. 15-year-old Portuguese and a 15-year-old Russian have more in common than, say, a 15-year-old Portuguese and a 30-year-old Portuguese, or 15-year-old Russian and a 30-year-old Russian. There is more of a gap. There's a big problem. They use different apps, but the young people, they, even though speak different language, live on different time zone, continent, they have more in common. And that fundamental difference would drive fintech usage, adoption, and success, frankly. And you ask, what are some of the big opportunity for startups? These are the things that are more difficult for the big banks to exploit, right? Big banks, they can't react to this so quickly. Each country's got their own laws, and they have different. The head of Russia, the head of Portugal for JP Morgan, how do they, right? So, but for a startup, you don't really care. I mean, a user in Portugal, a user in Russia, it's a user. Now, obviously, I'm not saying you can ignore the regulations in each country. At least, fundamentally, you don't have to design two apps. It's one app for the 15-year-old Gen Zs around the world, no matter where they are.